In line with what we're seeing on the broader price action front, how are they faring?
I think we're going to see Newcrest shares falling today. This result really coming in below our expectations and an increase in the expectation that we could see a downgrade to FY13 production forecast. Now, Newcrest have come out to say that they do expect to be on the lower end of their forecast of 2.3 to 2.5 million ounces, but this production report much lower than expected, and I think really increasing the probability that in coming months that we will see a production forecast downgrade there. If we have a look at expectations in terms of gold first, our expectation was for 527,000 ounces. It's actually come in substantially weaker at 493,000, and not only that, we were expecting to see the cash costs falling down to $681 an ounce. We've actually seen it rise from $703 an ounce in the previous quarter up to $727. Having said that, there are a number of projects which should be coming online in 2013 for Newcrest, so we should see the production profile increasing. Cadia East, we did see the first commercial output there on the 1st of January this year, and of course that Lihir million-ounce project, well, that's expected to be completed at the end of January, at the end of this month. However, these numbers really coming in softer than our expectations and market expectations. A strong probability that we could see a downgrade to production forecasts in coming months based on these production numbers that are coming through from Newcrest. A disappointing result, and I think we will see some downward pressure in terms of its share price.
Yeah, Goldman Sachs' current view, the momentum on iron ore pricing is fading. Difficult for this company to trade substantially above its net present value. How will it likely react to the release today?
Fortescue is highly leveraged to that iron ore price, so a lot of it is about the iron ore price rather than the production profile of Fortescue. But if we have a look at some of the things that are happening in terms of Fortescue, there's massive upside in terms of the production profile. We know there's going to be a lot more capacity for Fortescue coming online from developing that Solomon resource. In fact, just that Solomon resource at the end of 2013, expecting to hit a run rate of 60,000. And if we have a look at 60,000 tonnes per annum, if we have a look at Fortescue's run rate at the end of last year, it was 55 million tonnes per annum. And if we have a look at all of 2013, well, we're actually expecting it to hit 155 million tonnes per annum for Fortescue. So the production and the growth profile there is absolutely huge. We know that they've been selling off infrastructure as well as non-core assets. We know that debt is quite large for this company, but as production comes online, what we're going to see is that debt rapidly melting away. So capital expenditure has looked like it is peaking at the moment, and we should see the debt decreasing as more production comes online. Earnings upside as long as we see iron ore prices at these levels or rising. So we have seen a bit of stabilisation in terms of the iron ore levels. If we have a look at expectations in the September quarter, we did see 16.1 million being shipped. If we have a look at the expectation for the December quarter, which will be released today, it's around about 19 million. For the full year, we are expecting to see a number of just under 56 million tonnes. And if we have a look at FY13 estimates, well, we're watching that to see if we're going to see a revision there. But for the time being, we are expecting to see 82 to 84 million tonnes, and in the first half we're expecting that to be 36, so really ramping up in the second half of the year. So Fortescue, this is a growth stock, highly leveraged to iron ore prices. A lot of it is going to be about the iron ore price, given that the quality of iron ore that Fortescue mines is less quality than that of Rio Tinto and BHP, so it does get a lower price than BHP and Rio Tinto, which are the majors. Having said that, it's the fourth largest exporter of iron ore in the world, so we'll be watching this one closely.
OZ Minerals, Julia, the stock trades off to the minute by about 4%. Is this kind of just investor reflection on recent news or something bigger?
If we have a look at OZ Minerals, it's come out with its production report, and if we have a look at OZ Minerals, its only producing asset is Prominent Hill, so that's the asset that we're looking at. But of course we're watching for possible acquisitions so that it does have more in terms of its portfolio. We know that it has an investment in IMX Resources as well as a 19.9% stake in Sandfire, and it's also earmarked $750 million for acquisition. So that's one of the things we're watching in terms of OZ Minerals very carefully. quickly, because that's really going to change the production profile of this particular company. But for the time being, it's all about Prominent Hill, the only producing asset. If we have a look at expectations, it was for copper between 100 to 110,000 tonnes, and it's actually come in on the lower end of those expectations, just under 102,000. We have a look at gold, expectations were 130 to 150,000 ounces. It's come on the higher end of expectations there at about 141,000 ounces. But cash costs have been rising. The expectation was between $1.10 per pound to $1.20 per pound. It's actually come in at $1.20 per pound. So we are seeing costs rising there. Part of it is that it is having to mine deeper and more difficult material at Prominent Hill, and that's really seeing an increase in cost and a much more difficult production profile for OZ Minerals. 2013, still expecting to see copper production of between 90,000 to 100,000. But all up, it does look like those miners really coming under pressure, and that's the reason why the Australian market is falling today. We're seeing the gold miners coming under pressure, the big miners, and that materials space really dragging on our